Well, good morning, everyone. Today is October 20th. It's about 9 days before my birthday. My name is Roger Scott. I'm the head trader for Wealth Press, in case you do not know who I am, which at this point may be unlikely. But let's get through the morning reports. Let me tell you where we stand in terms of the economy, and then I'm going to talk about breakouts. I want to explain to you today breakouts that are overextended versus breakouts that are just getting ripe for a signal. It's a perfect example right now because we've had really good long side momentum, and a lot of stocks have been getting a little bit overbought and a little just overextended, in my opinion. But some look really, really good, and I like to buy stocks when they go. Usually stocks have two ways of trading. They go up and sideways, up and sideways, up and sideways, assuming they're moving higher. Those are the two rhythms of the market, vertical and horizontal. And you want to buy a stock when it's moving in a horizontal base and about to enter the vertical phase again, not when it's in a vertical phase. That's the mistake a lot of traders make. And what happens is they increase their risk. The stocks can still go higher, but your risk is much higher because volatility is higher when stocks are going vertically versus horizontally. So let me talk about the news, and then I'll talk about the stocks that are moving in different directions. So global markets subdued today as hope fades that U.S. will go through its badly needed aid. I'm still thinking that Trump is going to give some aid before the election. I think that's one of his plans, but again, what do I know? Situation's getting worse with COVID-19 wave coming back. Local governments are trying their best to bring the situation under control, but I'm telling you right now, it looks like it's going to be part 2 of COVID this winter. Because remember, during the fall and winter, it gets colder, especially in Europe. And whenever it gets colder, all the viruses start really, because people are susceptible more. And again, it's a flu season, it's a COVID season, and our vaccine was pushed back from November, as it was originally planned, to about January, February, and that's causing a little hiccup in the market. The biggest focus for the markets have been the fate of the U.S. economic stimulus, of course, given the heavy blow from the pandemic, social distancing restrictions, and business closures. And we may see part 2. I think the golden window, honestly, is going to be the next 12 weeks. If we can get past the next 12 weeks, I think we will have the vaccine. But I think the next 12 weeks, the next 3 months of the economy is going to be very, very, very crucial. Stocks have been mostly pushing higher this month after giving back some of the gains this year, a sudden September swoon. Yeah, we saw a little correction. Benchmark has notched a gain in each of the past 3 weeks. Even so, trading often has been choppy. Yes, because we're near the election. We're in a pre-election window. We've got a lot of uncertainty right now, folks. And with so much uncertainty, we just don't know what the market's going to do. This is actually very, very typical before the election. We had the same thing last 4 years ago. The summer was actually really strong, just like this summer. A lot of volatility, a lot of liquidity, and then as soon as the second, third week of September came, markets just petered out. It's like being in the middle of August right now, for all intensive purposes. The benchmark has noticed gains in each of the past 3 weeks. Even so, trading often has been choppy from one day to the next, reflecting uncertainty over the timing of the stimulus. Investors are also looking ahead to another busy week of corporate earnings. This week, we should be, by the end of this week, we got 86 S&P members reporting. Right now, the expectations for the remainder of the quarter is, and write this down because this is what the market's pricing into its value. Third quarter, negative 18.9% on 2.4% lower revenue. Okay. Now, it's too early to tell how things are going to shake out because we've only had about 60 S&P stocks report, which is only about 14% of their market capitalization. And so far, we're down about 17.8%. But again, we've got 500 stocks to report. We're only 12% down or 13% down. So by the end of this week, though, we'll have substantially more. We'll have about a quarter. So we'll have a really good idea. We'll have 27%. I'm reading this right now. We'll have exactly 27% by the end of this week. So keep your eye. The target for the end of the quarter is to be better than 18.9% south or 2.4% lower revenue. If we can do 12, 13, 15% lower expectations for the quarter versus previous, expectations, the market will rally. And 2.4, so it's 18.9% lower expectations from the same period a year ago on 2.4% lower revenue. Keep that in mind. Crude oil, we still can't get really past that $41, $40.85 barrel. Remember, frackers in the U.S. pay about $41, $42 for crude oil to process it. So crude oil right now, American frackers and processors are bleeding right now. So let's talk about what I wanted to talk about. Now I'll explain to you why. I always explain why because you guys need to understand where we're going. If you look at market momentum levels, and you really should see this right now, the broad market's looking okay. You got about, when you had a bear market last month, you had only 44% of stocks trading above $2, trading above the 200-day moving average. That's right, it was like that. Now it's about 60, 57, 60%. That's okay, that's not that bad. But if you look at the NASDAQ, and again, and I want to show you this because this is not looking pretty. If you look at the NASDAQ, you will see, I don't know why this is loading so slow, maybe because my computer's recording, 50 days backing off pretty good. But if you look at the 200-day line, you will see, again, it takes a minute. Sorry, I'm doing all this in real time. But I need you guys to see this. If you look at a 20-year chart, you'll see momentum is curling down. If you look at a 5-year chart, look at that. It's the highest momentum levels we've reached in 5 years. Let's see, 10 years? Let's go for 10. No, we've reached higher in 10. But I mean, look at this. Look at this. This is not pretty. This is not great. This is telling us that the NASDAQ 100, the top stocks, the Amazons, the Nvidia, they may be a little bit overbought in comparison to the overall stock market. So you may want to watch the NASDAQ 100 carefully and not jump into stocks that are overextended, which brings me to the next section. Now, very, very, very important. This is 90-day breakouts. I want to show you some stocks that look overextended versus stocks that look primed. So look at Zoom. Look at this thing parabolic. It's just moving. This thing's a little overextended. Right here was a good buy, right here, about 2 days ago. Where Pins is right now. Now, I like Pins. It's been moving sideways, and it's looking strong. It's given the stock time to consolidate. Pins, P-I-N-S, I like it right now. Zoom, I would wait for a pullback. I would wait for it to move back to the 510 level or so. Same thing with Snap. A little overbought. I like it right here, about 2 days ago. Most of these stocks look good 2 days ago. Look at this, JKS. Look at this thing. It's just too much, too fast. It should pull back a little bit. Citigroup, I would just stay away from it right now. Bank stocks are terrible right now. WestRock, overextended. ADM, overextended. STX, kind of like STX, not too bad. ENPH, Enphase Energy, doesn't look too bad. But again, some of these stocks like IP, look at this. Now we've called IP when it was like right here, 42. It's been moving up. It's a little overbought right now. I like the stock, but it's a little overbought. NLS, a little overbought. Cheesecake Factory, I would stay away from this stock. Best Buy, I like this little round top. I like the stock right now. This stock looks primed right now. PCAR looks really good. Again, same thing. Made a high, based out, made a new high. Taking out the high that was made on September 2nd. Very strong sign and not overextended. So I want you to see stocks that are overextended. Skechers looks really good, doesn't look overextended. This HDB, look at this run, overextended. APTV, nice little sideways action, not overextended. Darden Restaurant, a little overextended. So again, you may want to wait for a little pullback on the NASDAQ because most of these stocks look a little overextended, It doesn't mean they can't run up a little more, but your risk to reward level may be a little too high. So again, CVET, like the choppy action. Crocs, may be a little too overbought. STAA, too much volatility to the upside. Again, I'm just pointing out a few stocks that may be ready. BG, overextended. SIG, it's a little overextended. Fiverr, If it keeps consolidating, it'll be ready in a few days, but not right now. So again, keep your eye out on the NASDAQ 100. These stocks are overextended. So pins looks really, really good right now. I like it. I like this sideways consolidation with a little breaking up the upside, where Snap looks a little too stretched out. Zoom looks a little too stretched out. I would have liked Zoom right here 2 days ago, but right now it's a little too stretched out. Wait for a pullback. So again, you want to be really, really careful right now with stocks in the NASDAQ that are breaking out, because the NASDAQ may be a little overextended and may be overdue for a pullback. And I really like this pins right now. Looks like a really good stock. Now, folks, I spotted a massive shift in the markets, and it could change the way you invest for the next decade. In fact, the pick I found could triple your money or more by the end of this week. I'm giving all the credit to the new Robinhood effect that I've discovered. And guess what? You have the chance to trade this pick alongside me today at 1 p.m. Eastern Time. You better bring your note-taking pen, because this could be the only time you hear me explain this massive opportunity. Click the link below to claim your seat while you still can. Do it now.